Hello world, welcome to Harness Money. I am Colin. Are growth stocks dead? It has been a rough year for some of the biggest names in the stock market. Some of the biggest darlings of 2020, 2021 have been crushed. Just the list of names that have really fallen this earnings quarter. I made a list: PayPal, Robinhood, Netflix, and Facebook, just to name a few of some of the high flyers that have been cut just because they have missed their expectations. Now, it's a thing to remember that the stock market runs on expectations. What is going to happen in the future rather than what is actually happening right now? And so there are a lot of things that the street is worried about, and that is high inflation, the coming raising of interest rates. When interest rates rise, that generally hurts growth stocks because it costs more money to borrow debt from banks and institutions than when interest rates are really, really low. Money is cheap. It's easy to borrow and use that money to grow the business. So it creates a little bit of fear, but I think it's a little bit overblown. Some of these businesses are great businesses. They've just faced some headwinds in the overall economy with the inflation that's happening, with the unsteady consumers. The stock market is really struggling overall to be at its highest, to perform at its best. A lot of companies have taken a hit just because of the pessimism that is existing in the overall market. But some of these other companies have been hit harder because the future is uncertain. Facebook, for once in their lifetime, have lost users rather than grown users. But I've always been of the mind that for a business like Facebook, which is now Meta Platforms, that they really should be less focused on growing the number of users at this point. They've got enough users on their platform. They need to be focused on really making users power users, keeping the people that they have on the platform in their platform. And I really think they should become a business platform, that they should look at their product as not social media anymore, but as a way for businesses to sign up and use their platform to provide products to the audiences so that everybody will win. The businesses will win. The people that are providing the content will win because they could share in some of the profits. And then the consumer wins because, number one, they find products that they like and they still get to consume the content that they specifically follow. And no one has done this better than the Kardashians. I think the Kardashians have shown that anybody can create a business based around themselves, based around their interests. And I think Facebook really should lean into that and become more entrenched. And I just don't think they really have, especially with e-commerce. I look at Facebook and I think, why aren't they Amazon? Why can't they be a version of Amazon? Not try and necessarily copy where they're providing products within a day to their consumers, but why aren't they doing more with the e-commerce tools and having a payment system, having in-store websites, and just better ways to get consumers hooked into businesses' products, and even maybe having their own warehouses, developing their own system of storing products and getting those products out to consumers, rather than the other approach which they have taken, which is Zuckerberg has taken it, which is building this metaverse. If you're going to build a metaverse, you really better have some engaging content. You really better have amazing games. You need to have probably like some Netflix like shows like Squid Game, or some type of content that really hooks people in and gets people to want to interact with that content and stay hooked into that content. But back to the growth story. Growth is definitely going to have a rough 2022, but this is the time that investors are made. This is the perfect time to be an investor. If I were someone like Buffett or Charlie Munger, I would be buying stocks that I love, buying companies that are great right now and just holding on for the next, it could be years. That's the thing about downturns, is this economic downturn. Number one, it could get worse. And number two, it could last a lot longer than the downturn of 2020. When the stock market crashed in 2020, the government sprang into action and said, okay, we're going to flood money into the system and we're going to turn this thing around. And it really did. Within a relatively short amount of time, the stock market turned around. This is a lot more difficult problem. You can't solve this problem by printing money or putting more money into the system. It's really about pulling back. It's really about cooling the economy off, which means that some of these growth companies are going to have a harder time than some of the big boys, the Pfizer's, McDonald's, Disney, let's say some of the older industrial companies like 3M and all those different types of businesses are going to do better in probably 1 to 5 years than these growth stocks. These growth stocks like Robinhood and even PayPal. PayPal was crushed hard, but I think the future is still bright. This is the perfect time to get in. Some of my favorite stocks are going to be, The Honest Company, Dutch Bros. I think Dutch Bros is probably a once in a lifetime opportunity to buy into a franchise that people absolutely love. It provides a great product and just ride that wave up. And same with I think that Robinhood needs to execute on a couple different fronts. They really need to go deeper into the crypto metaverse or the crypto wallet space than they have now. It's not good enough. The offerings that they have, they need to become more entrenched in that system and probably become more entrenched in the traditional banking products. Like I'm thinking about like loans of some kind, like maybe addressing some type of like student loans or auto loans, creating some type of component for that. I think the product that they have is great. I will always be a fan of Robinhood because they really changed the investing game for the little guy, but they have a lot of work to do, and I wouldn't be surprised if they got acquired. I would not be surprised if a PayPal or some much larger banking institution came along and said, okay, we want this because your software is so great, because it's so easy to use that software and it's so engaging that we just want to incorporate that and build on those tools. And you better believe that the bigger banking companies are coming after all the fintechs. So all the growth fintechs like SoFi, like Public, who else? Maybe Coinbase. The big boys like JP Morgan, Bank of America, I believe they are all developing more fintech solutions for their customers. And specifically JP Morgan, I see that business as really developing a good quality online mobile solution that can really take on some of these fintechs. Because if I'm being honest, the fintech just made it easier for the consumer to invest. And it really set a standard that you look at some of these other businesses and you're like, well, the software is not as easy to use, so I'm not going to use it. I think that the big banks are going to take advantage of these little companies and incorporate their features into the big banks. And then the big banks are going to do well this year because that's JP Morgan, that's Wells Fargo, that's Bank of America, that's US Bank, probably Citi, Goldman Sachs, the list goes on and on. As interest rates rise over the coming year, the big banks are going to make more and more money, and that's going to put a lot more pressure on these smaller companies to grow faster. They're going to really have to execute, or they're going to get left behind, and their stock is going to stay lagging in the dumps. But do I think growth is dead? I don't think it's dead, but I think that this is the time when companies are going to be made, that the best companies, the management is going to really have to execute for these companies to rise in price and really become sticky adopters in the minds of consumers. So it's not dead. This could be the perfect time to invest. I've missed out on other opportunities. Like I really was not investing in 2008. I was just too young, didn't know what I was doing. So I didn't really get to take advantage of the dip in the market at that time. So when these recessions happen now, I am fully taking advantage of these recessions and buying some of these companies, like definitely buying Netflix, definitely buying PayPal, because those are gigantic businesses that I think will continue to execute and have enough resources in the bank to withstand this volatility that's going on right now, and will come out the other side and execute well. So find your conviction stocks, those companies that you really believe in, and focus on the good ones that you think are going to do great and really put money into that. And then maybe diversify into some other safer stocks, some inflation hedge stocks, businesses that can pass on price to the consumer. I'm thinking like Walmart, Costco, Amazon, McDonald's, Starbucks. All of those businesses can absorb the price increases and then just pass that on to their customers, and the customers will understand. The customers will keep coming back because they have to use those businesses. You have to go and buy groceries at Walmart, so you're going to absorb that cost. You're really, if you're addicted to coffee, you're going to have to go back to Starbucks and get the best coffee that you can because that's what you're accustomed to. So use this time, take this time to really start investing into the market and have a quality strategy. Thank you for watching this video. I am Colin, and remember, make good money choices. Till next time.